Is Charles Schwab's $26 billion acquisition going to be enough to turn around the stock medium term for investors? Hello, I'm David Jones. I've been a technical analyst in financial markets for 25 years, and this is our channel dedicated to US stocks. I thought we'd take a look at the brokerage Schwab in the last couple of weeks. We've heard they're going to be acquiring their competitor TD Ameritrade for $26 billion. We've seen quite a positive reaction by the market for Schwab's stock price. What we're going to do, we're going to jump on, take a look at the recent reaction first of all quickly, then I'll come back, talk a bit more about what this deal could mean for Schwab and whether this will turn around the company's fortunes. Then we'll go back and look at things in a lot more detail. Before we do that, of course, don't forget, if you're watching and you haven't subscribed, if you can subscribe, support the channel, and we'll continue to push out content like this. Let's catch up with what the market made of that announcement by Schwab to take over Ameritrade.
So let's have a quick look at what happened to Schwab since they announced this deal. So the price had been in decline for the best part of 18 months. So from May 2018, the shares were about $60 a share and had traded down to about 35 by October of this year. But you can see the reaction, the market reaction when they announced this deal to take over Ameritrade. I'm going to talk a bit more about that and the sort of the brokerage industry as a whole. Then we'll come back, look at this in a bit more detail and see where the opportunities might be.
So we did see it gap higher on the move. It's an interesting sector at the moment because, of course, it has changed so much over recent years. You know, we've seen the traditional brokerage model of charging regular fees for commission, maybe management charges, really getting eaten away by new entrants into this market, relatively new entrants such as the likes of Robinhood. Schwab had already eliminated transaction fees a few months ago, and on this news, Ameritrade stock had dropped 30%. So many are saying this was a canny move by Schwab to depress the price of the stock ahead of a takeover. But the importance of trading fees had already dropped. In the previous quarter for Schwab, trading fees represented only 7% of the total revenue for the quarter. So we have definitely seen a shift in the model in recent years. And as usual, you know, the hope of combining the two companies is to reduce costs and try and maximize the profits made from other services to clients. We'll take a look at what this means for the share price in a second. First of all, let me talk about the big levels to watch. So we have some historical levels left from the end or the last quarter of 2018. But for me, I think the important levels to watch, if we see the stock start to sell off, are the levels on the downside. So we're ahead of about $42 a share, the lows just before this announcement was made and the share price really took off. But let's take a look at these on the chart now. Let's jump back onto it and see where the opportunities could be.
So let's dig down into this in a bit more detail. I think it's quite interesting. If you go back, the history of the Schwab share price, if you look at what happened in the late 90s, at 1999, not surprisingly, during the dot-com boom bubble, plenty of people were getting involved in the stock markets, and we saw the prices of brokerages really soar, and Schwab's price hitting $50 a share back then. But it took, another 18 years almost until we got back to those dot-com bubble prices. You know, clearly we've had rising stock markets and brokerages such as Schwab have benefited from that, but it took a long time to get back to those dot-com mania sort of levels. But let's look at what's been going on really over the last couple of years or so. So despite continually rising stock markets through much of 2019, the share price of Schwab continued to stay under pressure. And I think that's probably because of the ongoing competition in that market, with plenty of brokers like Robinhood coming in and just doing zero commission trading. So more traditional brokerages like Schwab really feeling the squeeze. And then we saw the announcement in November, and we've finally, over the last few weeks or so, broken the back of this weakness. But I think the question now is, maybe when that initial euphoria starts to die down, where's the opportunity? Let's just take a look at maybe the last couple of months. So it's clear where the announcement came in. We can see that the gap higher on the announcement. And whilst it might be tempting to just pile in and think, well, that's it, we're going to be on the road to recovery here, perhaps the more patient approach for investors and traders alike is to wait for some of the dust to settle. You know, yes, we have broken out this downtrend, the recovery. We're only 5 weeks into this recovery, is still going strong. But I think Let's see what happens when we see, if we see the share start to pull back. Where do we see the buyers come back in? And let's make sure that this surge isn't just a knee-jerk buy the reaction to this deal getting done. So let's pick out some of the levels. So for my money, this is the trend to be watching at the moment. You can see it's slightly accelerated away on news of this deal. But I think for the sort of short-term minded amongst us, I think it's the lows just ahead of that announcement. So coming in ahead of $42 a share. And these were a bit of a barrier on the way up late October. So if we did see the price under pressure from here, be expecting to see buyers come back in perhaps in the mid 40s and really looking for these old lows at $42.40 to hold, to confirm this trend is still valid. So overall, it does look positive. Broken out of that downtrend. We've got this deal with Ameritrade now where they've taken over Ameritrade, looking to cut costs and get more competitive. And we do have this recovery going on. And it's really, for me, in the short term at least, all about the 42s holding. Just one quick look at the dailies. You can see how extreme the RSI is. We've got a 10-day RSI here. In the past, it's done a pretty good job on the way down of calling tops. So again, suggesting, which we can see from eyeballing it, that perhaps it has got a bit overstretched in the short term, adding a bit more weight to waiting for a pullback. When it comes to targets, let's just take a quick look at some of the obstacles on the upside. I think the next immediate obstacles from the last quarter of 2018. So running from about 52.70 in September up to sort of just above 54 from the summer of last year. So there's definitely scope for a bit more movement up here, but from a risk reward point of view, looking at the RSI, looking at the trend, looking at the reaction by the market since the announcement, perhaps sitting on our hands waiting for a pullback is perhaps the more disciplined and patient approach to this one.
So perhaps caution is the watchword here. We'll come back to it in a few months' time and see how things are doing. But for this update, we'll leave it there. So from me, David Jones, good luck with your trading and investing.